everyone. Welcome to Jamaica 411. Thank you so much for stopping by, keeping me company as usual. If you're here with me for the first time, welcome, welcome. Please subscribe. Give the video a thumbs up if you enjoy the content. And share, please. As well as feel free to leave your comments in the comments section. To my subscribers and regular viewers, welcome back. Very nice to have you. I appreciate you guys greatly. You keep the channel going, spreading the news, and getting Jamaica 411 mentioned all about the place. I hear all sorts of people in high places listen to us, and I'm sure they read your comments. Yes, indeed. So I appreciate everything that you do for our channel. Yes, our channel. Now, of course, you know the ropes, right? You're going to go ahead and give the video a thumbs up from now on because you're getting quality stuff. I know that because I hear your appreciation when I read your comments. Yes, I do read the comments. And also remember to share, and then you can rejoin me. And of course, I'm bringing this Finsac Saga for you because it was by popular demand. I don't know how many persons are really interested in it again, but I think that there are some information that we need to bring you that would explain what happened at the time, because many persons are who subscribe to the channel and who come to us each time we upload, they may not have been old enough at the time, they may not have been alive at the time, so they are depending on us to give them the information about what happened just as if they were living it, and that is what I am trying to accomplish. So we're going to begin with the question and answer. We're going to start with a question that was asked at number 40. Was any external advice sought as to how to deal with the financial crisis in the mid-1990s? If so, from whom and what was the advice? That was what they asked Omar. That was a very important question. So let's see what the answer was. So this was Omar Davies's response to the commissioners. Yes, advice was sought from the IMF, the World Bank, and the IDB. The discussions took place in both Kingston and Washington and dragged on for several months. The summary of the advice, which was eventually received, listen to what them said, the IMF, the World Bank, and the IDB decided, The summary of the advice, which was eventually received, was that intervention would be costly and would impact for an extended period on the fiscal accounts. Against that background, the advice was to allow institutions to fail, their principals excluded from future participation in the financial sector, and the depositors paid out of the proceeds of the sale of the assets which existed. In order to effect this approach, there was a recommendation to close the whole financial system for a period of 2 weeks to implement all the required changes. This last recommendation reflected a total lack of appreciation of the implications of such an action and was rejected as impractical. Let me ask you something, my peeps. Can you really believe that the IMF, the IDB, and the World Bank would tell the Jamaican government they must lock down the financial sector for 2 weeks? Would they go tell the United States to go do that? Would they have gone to tell Britain that they must do that? So these people, look here, them take with a big head, but them think so we are idiot, black people, fool, them could have come and tell them this garbage. And we would have said, oh, these white people know what they're talking about, to lock down the blasted place. No, seriously, I want to think about what this is, I need to think about what this is, This is why we cannot do business with these people. We need to do business with our own people. Kalanga, Africa, go find them, although them in a problem to rat it. But you see, it is essential that we don't take advice from certain people, right? You saw what happened when I read for you yesterday what R. Danny Williams said. It was a private sector organization that went to PJ and advised PJ. PJ don't know a thing about business. He don't seem to know anything about anything else more than law. Right? I'm sure the technocrats were advising them against it because R. Danny Williams said that they persuaded the government to don't do this thing in stages, do it quick. And PJ decided to go listen to them. Why? Because them are white people and then all them are business people. Right? That was his mistake. As one of my, I sorry I don't recall the name, my darling. I think it's Beverly. Right? As Beverly said in the comments section, and she's perfectly correct. These people who we elected, their job is to make sure they pick sense out of nonsense. That was PJ's duty, and he failed us when he went and listened to these private sector people. Right? And went and deregulated in a rush and caused whole collapse. Caused all of the problems that you heard Danny Williams was telling us about. That happened at the time, that we experienced. But we didn't know what was behind it. Right? And here was the IMF telling them, look here, intervention going to be too costly on the fiscal budget. Just make the companies them fail. This would be, listen to this, you know. This is not only Life for Jamaica, you know. That's an insurance company. You can go along. Victoria Mutual Building Society with all them people money that them put in there in order to save up their money to go build them dream house. At them want lockdown, you know. Them wanted NCB, the biggest bank, you know, for lockdown with people money, you know. Them wanted all the other smaller banks to lock down with the people money, you know. They wanted Eagle Commercial and all of the other businesses, indigenous business, to lock down with the savers money. Tell me if these people are righted. And tell me if these people not take black people with big head bud. At least what they were saying was so outrageous. And it would appear, based upon what Omar is saying, at the last part, when they realize how bad advice they might get. They must have locked down the financial system for 2 weeks. I mean, how the hell the country was to function with that advice? So, them realize happily that this was egregious and stupid and wicked advice that these people were giving us. If you go mash up the whole... Them not know Jamaican people, them damn well know what they were doing when they were advising the government this way, but they think them fool, and they would have taken the advice and go mash up the whole country, because that's exactly what was going to happen. So they rejected that garbage that they were getting out of people who supposed to be knowledgeable about financial matters, right? You think them could have go Greece, go tell Greece that? Why they never go tell them that? When the Germans and them went to war in a World War II and the whole of Europe mash up, why they never just allow them to stay mash up? These people are evil and wicked, and we need to keep out of them way if we can. Right? So what did the government do? Never took the advice. They set up Finsac. And you're going to read what Omar said. So let me just continue. Let Omar explain to you what they did after they rejected this garbage that was being told that they should do. I mean, when I read this, I have to bring it to your attention. This couldn't pass, I mean, I bring it to your attention. You know, sister, these people are not respect for black people. Talk truth now, my peeps. I am telling you. Anyhow, let's go to question 44. And I tell you what, all of you who are encouraging me to go and bring you the Finsac information, go and do the research, I am very grateful to you. Very grateful because, I mean, look at what we are learning. I mean, I don't know if you knew, but I certainly didn't know. And I hope you find the information interesting so far. Well, let's go to question 44. It says here, the November 1996 report of the IMF, IADB, and IBRD estimates the size of the insolvency of Jamaican financial institutions at 20% of gross domestic product, and advised immediate action to rectify the situation. The same report says that your administration decided that this was not politically possible. Can you please explain what was meant by that statement? Do you think that the eventual cost of 40% of gross domestic product was an acceptable trade-off in this regard? So this question now is a follow-up question to what they asked before. Of course, they didn't know what the answer would have been. They just sent him a list of questions for him to respond to. And we already read that they had said that the system should shut down for 2 weeks. Them should just allow who fail. And as for the depositors, just sell the assets. Remember now the liabilities exceed the assets, Sell the assets and give them what them forget out of it, and make the creditors get what them forget, which means the people who probably lose every damn thing, the depositors, right? And that would mean you people who were there, who were savings, you'd lose all of your money. So that was a response that Omar gave that I read to you that made me very vexed. So they are now asking, why you tell them that it's not politically possible to do what they were advising. So let's read what Omar's response was to the question. It says here, I do not recall a specific report to which reference is made. I recall discussions with the institutions, and the representatives of the institutions were told that the closure of so many institutions would result in chaos. I do not recall the use of the term politically possible. I do recall it being pointed out to the multilaterals, the potential social consequences of some of their recommendations. As regards the trade-off of the cost of the intervention, there can be no definitive response. Whilst the eventual cost was greater than expected, there is no way to assess the social chaos which would have resulted from taking some of the actions recommended by the multilaterals. Example, closing the system for 2 weeks. That seemed to be what triggered them off. Now, in all fairness to the multilaterals, if I may say so, the way in which they were recommending that the companies that were insolvent should just close, and the people who had money in them should just sell off the assets and pay them back. That is how it would normally be. That, you understand? That's a normal way of doing it. With a 1 or 2 company that might be in foreclosure. You follow? But this was a system-wide issue. So the approach could not be the same. You follow? Because I remember watching TV, and see a man, lie down before one car, and hold on the car. I don't know who the persons were driving, if it was the manager or what. This is the heighty, Hold on the front of the car, and the car moving, and him determined, said the man not going anywhere, him wanting money. I mean, let us not even bother think about that. Let me just go to his report now. So I thought I would bring that to your attention so you could understand what it was that would have happened if they were as dumb as the IMF and the IDB thought they were and accepted that. I mean, this country would be talking about something very different today. I mean, it would be doubtful that we would still have a democratic system operating, because I do not think that the government would have even survived as a government. But anyhow, let's continue. So this is what Omar Davies had to say. Statement on Finsac. This is the introduction. In this statement, I will address 4 major issues which effectively summarize the questions about the financial crisis of the mid-1990s and the government's response through the creation of Finsac. These 4 issues are: 1. Was the crisis in the financial sector caused by the administration's interest rate policy? 2. Were the owners or senior management of the affected financial institution treated fairly? 3. Was Finsac operated in a professional and transparent manner in dealings with bad debtors? 4. Was the sale of the portfolio of bad loans to Jamaica Redevelopment Foundation, if I remember the name correctly, handled fairly and in a transparent manner? That should be of interest to us. So let us read on. He says, the cause of the crisis. The soundbite phrasing is that the cause of the crisis was the government's high interest rate policy. The response to this charge is twofold. First, similar financial crises have occurred worldwide and in many of those jurisdictions, for example, Scandinavia, Japan, and the US. They have occurred during periods characterized by low interest rates. He's presenting his argument now, okay? So let's focus and listen to what he's saying. Objective analyses of the causes of such crises invariably point to bad operational practices in the institutions and the failure of the regulatory system either to detect such practices or to act quickly once they are detected. There are clear lessons for the Jamaican case. Omar seemed to be suggesting here that the real problem was that the businesses, the financial institutions were badly managed, but the system failed because the regulatory system that was in place did not detect the practice quickly enough and responded quickly enough. That's basically his argument. Let us continue. And we'll see soon enough if we agree with his arguments or disagree. Closer home, Trinidad and Tobago is still grappling with a resolution to the collapse of the CLICO group. The IMF country report, March 2011, for Trinidad and Tobago analyzed that collapse and references the crises in Jamaica in the 1990s. In analyzing the causes of our crises, the IMF highlights the bad operational practices of the failed institutions. There is no mention of high interest rate. So what he's saying is that the IMF did their own analysis and came to the conclusion that it was the institutions themselves taking decisions that caused them to fail. And I think when we were reading our Danny Williams submissions, we detected some of them. They had, in fact, took short-term money that, you deposit that you can withdraw at any time. And then instead of putting that into short-term instruments, right, such as the government papers, which evidently was what the foreign companies did, they took it and put it in real estate. And when the crash came and people want back the money, they couldn't get it back in time. And that was what caused them to go borrow and cause a whole heap of confusion. But anyway, let me continue to read what Omar says and try and keep quiet. Okay. A second point is that although there was a period where interest rates were high, the use of this lever of macroeconomic policy cannot be taken out of context. Many persons who assert that high interest rates represented the fundamental cause of the crisis fail to take into consideration, either deliberately or unwittingly, the context in which these rates were applied. What is this context? It is a fact that the first half of the 1990s was characterized by high levels of inflation and instability in the foreign exchange market. As regards inflation, Jamaica experienced inflation of in excess of 100% in fiscal year 1993-1994. Our Danny Williams forgot to tell you about that. For some years following the liberalization of the foreign exchange system in 1991, the market demonstrated extreme instability, and our Danny Williams told you why. They did it quick and fast rather than gradual. The cry at that time from both the general public and business community, the PSOJ, was for inflation to be controlled and stability to be imposed on the foreign exchange market. True. With few policy tools available to the authorities. You remember we spoke about that? Yes, they don't have many options available, but I had an idea and I will discuss it again with you, and then you can tell me if it makes any sense. And then if you know anybody in the government, you can go whisper in their ears so they can make laws and make sure that in future the generations to come will know how to deal with these crises whenever there is too much money in the system. Right? Great. Well, let me continue. With few policy tools available to the authorities, liquidity was tightened in order to make it more costly for currency speculations to buy speculative holdings in US dollars, a practice which had been artificially driving up the exchange rate and inflation. So people, whenever you have inflation, it means that your money will not be able to buy today what it was able to buy yesterday. So what people do in order to preserve the value of the money, they quickly change out their Jamaican dollar savings into US, hoping the crisis will pass, and then they convert it back. That now caused a shortage of foreign exchange, and he's saying that that was what they were trying to prevent with the tightening of liquidity in the market. You understand? Good. There is the legitimate question as to whether the policy ought to have been pursued as aggressively and for as long as it was. The reality is that during the period, attempts to move gingerly had borne very limited results. You remember our Danny Williams was speaking about that they were going gingerly, and then all of a sudden, boom, in 1 year, they shot up the interest rate above what the inflation was. You remember that? And then everybody just went and fell like stones. Yes. Let me continue. So he said that the reality is that during the period, attempts to move gingerly had borne very limited results. The twin challenges of rapid devaluation and high inflation had sowed the seeds of an impending social explosion. They were concerned about me and you are going bad. Anyway, me a good behaving girl. They were concerned about you are going bad. Just like when a lot of people went on real bad in 99 because of that the price increase on gas. Yes, that's what they were afraid of. That is what he's saying in an event. We will analyze that later. In the present discussion, this background to the decision to tighten liquidity has been conveniently forgotten. Nevertheless, the question of the pace and extent of increase in interest rates is one on which reasonable people may differ. Treatment of owners or senior management. Listen to what he said here. It is a travesty that several owners or senior managers who egregiously mismanage the funds of investors, savers, are seeking to portray themselves as victims of Finsac. Jamaica had a major problem related to the predominance of the position of executive chairman. There's a position called executive chairman. He's going to tell you what that is. In several local institutions. This position provides the holder with excessive powers and inadequate checks and balances. As Chief Executive Officer, he determines what matters are brought to the board, and as chairman, he has significant influence over the selection of other board members as well as controlling the conduct of board meetings. As such, the executive chairmen were able to manipulate the affairs of their companies, often leaving other board members in the dark. In other words, an executive chairman is both a chairman of the board of directors and the CEO of the company. And they misuse their office and cause a whole heap of problem. It's long and short of what he's saying. The treatment of these executive chairmen was not based on arbitrary assessments. The government of Jamaica engaged international experts in forensic auditing to examine the operations of the institutions which had been intervened. These included linguist Avi of Canada, Ernst and Young of the United Kingdom, and PricewaterhouseCoopers from Canada. They never use nobody locally so that anybody can say, like a bias go on, and went to foreign and get the foreign people them who know business with what go on at Jamaica. So they were expected to give independent judgment as to what they found happened. Their reports were formally documented and are available to the Commission and the government. If pursuit of the facts is really an objective, these reports should be released to the public. I wonder if it was released to the public. We should ask for them. We want to hear. We want to know everything, right? We want to know what got down. Innumerable violations were identified, some of which we were advised would have led to criminal charges in jurisdictions with more rigorous financial legislation. Violations included the evergreening of loans and the making of excessive under collateralized loans to connected parties. The term evergreening describes the corrupt practice whereby a bad loan in a group company is sold to another at face value, thus removing it from the portfolio of the first company. If this process is repeated, it becomes almost impossible for the regulators through one-off audits to spot the deception. So he's basically saying what they were doing to make them company look like it was profitable and doing great is that they would shift out the bad debt to some other company affiliated with them. And when the auditors come in, they would, sign off on it and say everything is all right. And in truth and in fact, not like that. Now go on. Anyhow, the corruption and malpractices discovered in these institutions bordered on the incredible. In the case of the Central Financial Group, headed by Mr. Don Crawford, it was found that the external auditor was himself a bad debtor. Lord have mercy, come here. People come here. Who not bring crowd, come here. Bring crowd, come man. This one crowd. In the case of Central Financial Group, headed by Mr. Don Crawford, it was found that the man who was doing the external auditor, the one who is supposed to be independent and giving an independent report as opposed to the internal auditor, Omar is saying that that person was a bad debtor of who? Century? No, sir, nothing can go so. Omar, no, I don't believe you. Nothing can go so. You don't believe it? What could I really go so? Anyhow, make we continue reading. The situation was worse within the context of the group of institutions controlled by a set of executive chairmen, in quotation, who call themselves the Owners Club. Loans to connected parties were often transferred between their institutions in order to avoid detection by the regulators. Lord have mercy. My peeps, make a note of this. The Owners Club, because we have to find out who them people are. Do you not think that's important for us to know? Yes, it's very important because we need to know if them still exist. Anyway, let me continue. Omar went on to say, when these discoveries were made, it became very clear that these owners could not be allowed to continue to operate within the financial sector. Put bluntly, they could not pass the fit and proper criteria. It is a matter of record that at an emergency cabinet meeting held one Sunday night at Ville Royal, former Bank of Jamaica Governor Jacques Bussers, you remember that Canadian fellow that they brought down, advised the cabinet that it should act decisively against a set of local institutions. The Bank of Jamaica's analysis had identified many of the deficiencies and corrupt practices, which were later confirmed by the forensic auditors, the foreign people. A factor hindering the search for the truth about the financial sector crises is that many who worked within these organizations and are fully aware of the malpractices have chosen to remain silent. A specific example illustrates this point. I recall a visit paid to me by the executive chairman of a leading insurance company, accompanied by his 2 deputies. He came to make one final plea for government support for his organization, whilst retaining him in his position. After the meeting ended and the chairman had departed, my secretary informed me that the 2 deputies wished to see me again. They pleaded with me to reject their chairman's request, as they felt that under his stewardship, the organization was doomed to fail. I have deliberately refrained from giving names, but if necessary, I will. Cockroach. No, sir. You know, sir, I'm reading this for the first time with you. I mean, I'm just dumbfounded by what I'm reading here. I never know how them gem was in the Finsac report, man. And may I tell you, let me continue. A point must be made which many seek to ignore. This is a fact that during the period of the crisis, the local subsidiaries of the Bank of Nova Scotia, CIBC, and Citibank were not affected. Neither were Jamaica National Building Society and the credit unions. It is true. These institutions were operating in the same macroeconomic environment with the same high interest rates, but they prospered. Why the difference? The difference lay in the fact that these other institutions operated within much stricter guidelines. Yes, from the companies, the head office in Canada, in the case of BNS and CIBC, they were operating under the Canadian rules, while Citibank would have been operating under, well, I don't know, the American regulations. It's an American company. So he's correct. It was not possible for the CEO to take arbitrary decisions, to make questionable loans, or to use short-term funding to acquire long-term illiquid assets like real estate, or to invest in sectors of the real economy in which they had no expertise. Hey, you want to hear, my peeps? Bank run orange farm, pawpaw farm, and gone into hotels. And all them things that they used to go on with, Yes, man. And of course, you know the history, right? Yes, you would have heard. Yet, another corrupt practice came to the fore. Following the completion of the forensic audits, it was revealed that many of the bad debtors were simultaneously clients of several institutions. These clients used their contacts and connections to secure loans from several domestically owned banks, with few of these loans ever serviced in line with the loan agreements. I can tell you about a case of a man who owned enough hotels in Montego Bay. When you look at the title for each one of his properties, he had debts with a particular bank. And when he took out another loan, the first one was not discharged, right? And so he had a whole heap of debt. Maybe several times he took out loans, and he had a total of $700 and some million and couldn't service none of them, right? So I know what he's talking about. And not to mention the politicians, they were being given, some of them, unsecured loans. In the case of NCB, several of the managers had to be dismissed because of the loans that they were given either to themselves, or to persons, with connections. A whole heap of things used to go on. But let me continue. Objectives or operations of Finsac. So he's going to tell us now the reason why Finsac was established. This now would be in response to the rejection of what it was the IMF, the IDB, and all them foreign people were suggesting, which just to make the thing just flop and close down the thing for 2 weeks and see if they can fix it. So they decided instead to advise themselves. I don't know who gave them the advice. Probably the technocrats in the Ministry of Finance, but they decided now to set up Finsac in response. So let's see now what the objectives or operations of Finsac were. It is important to indicate that Finsac was established after it became apparent that the problems in the financial sector were widespread. It is inaccurate to speak of Finsac having clients who they treated badly. All these clients of Finsac were inherited from failed institutions with existing contracts made with those institutions. You follow that? So when they took over Workers Bank, Citizens Bank, Jamaica Citizens Bank, Central National Bank, Eagle Commercial Bank, you have the LOJs, the insurance companies, and so on. When they took them over, what they did, they took over the debts. That's what Finsac did. It took the debts, which means that those contracts, those loan contracts, were taken over by them. And then they repackage the companies and then sell them without those debts. If they had the debt there, it would make no sense somebody buy them. So that's what Finsac did. It just took over those loan contracts that were bad debtors from those companies that held them and were being strangled by them because the people cannot pay. You follow? Great. But the customers remained with the banks unless them draw out the money and go somewhere else, because they had given back the people all of the money, the depositors, except I think one institution. But let me continue. He said, against the backdrop, Finsac was established to protect the thousands of 1. Savers in the failed institutions, and 2. Pensioners and employees whose pension funds were mismanaged by the failed institutions, and 3. The insurance policies issued by the failed institutions. Finsac was not established to protect the owners or managers of the failed institutions or their bad debtors. I, for one, agree then, and I agree now that should have been the case. Because, look here, if the depositor had lost the money, as the IMF was proposing that they should do, right? Because when you sell the assets, which is overrun by all of the liabilities, they would have got nothing. Who the hell would invest in Jamaica after that? Would you put any money in any institution in Jamaica? No. So the confidence in the system would have been flat. With respect to some of the bad debtors who may have borrowed money on a mortgage, I would have to do some research for you to find out if once they sign that mortgage instrument at a certain interest rate, whether or not, if there is general interest rate increase, if the mortgage interest increases as well. Somehow I have a doubt that that is the case. So I don't think that those persons who borrowed money to buy homes, I don't believe that they were affected. But I will have to do that research for you. But for now, let me leave it here. We will come back to the objectives or operations of Finsac. Let me know if you find this interesting, if you want to hear not more from Omar. I still think he has information to give us. He's basically giving us the other side of the story, that, those persons who were affected that he's talking about, those executive chairmen with superpowers, power of God, they were not going to come and tell you these things. So it's good that we hear from all sides. Do you agree? You want to hear any more from Omar? Please tell me in the comment section. Anyway, until such time, you take good care of yourselves. And thank you for liking, sharing, subscribing, and leaving your comments. Until next time, walk good.